Hi, this and good morning. This is a backtesting video for the month of July. The reason why we did some buying and selling. So first of all, we go off to the 4-hour time frame. And on the 4-hour time frame, we'll go simply to July 3rd, which is the first Monday, the first trading day of which is somewhere around here. So as we can see, we have been inside a range in the month of July, but overall we are bullish. We have been bullish since the month of June into the month of July. So I realized that price was moving in a range, moving sideways after reaching the overall high on the 22nd, and ever since then price was moving sideways till 10th of July. So we'll quickly go to the 1-hour time frame and go straight to that very date. On the 1-hour time frame, what can we understand here? We understand that the market was making lower lows. So more of sell opportunities are likely to occur. That is, price tapped into this demand zone after rejecting from the daily. The pink zone is known as my daily zones. Then, so price rejected from the daily zone and came and sold off immediately. So I knew this place was a 4-hour demand. So I knew anything here is going to buy off. Anything here is going to buy off. And price found its way back into the 4-hour supply zone and decided to sell off, which was totally nice. But it took quite some days, about 3 days. As you can see, each of these places are the Asian range. These ones, they are known as my Asian range. And price took quite some time for the Asian range. 1, 2, 3. That's 3 of it. Okay, so what is this video all about? I'm trying to show us the overall flow of the market, why I would have taken a sell even from the small time frame, because without that the big time frame would never make sense. So there is this supply zone here, there is another supply zone here, and there is another one here. So the one that I'm looking forward to is the one that started on July, which is here, as you can see. So this is Monday, 3rd of July, around 1500, which is around 3 o'clock in the afternoon Nigerian time. So how am I supposed to get my entries? All I simply do is, first of all, my first entry comes here. This entry is for stop loss above the zone. So this entry is a 1 to 6 risk to reward ratio. We'll leave it at that. And as you can see, it took price quite a total of 2 days to get to the overall profit targets, but it's a 1 to 6. But in the meantime, when we went to the lower time frame, so we're now going to the lower time frame. So go to 15 minutes, 3rd of July. On the 15 minutes, 3rd of July, this was that entry that we spoke about earlier. So this was the entry. We got tapped in, stop loss above the range. Maybe we can bring this a little bit down. Yeah, stop loss above the range just a little bit, and price started moving sideways. It was moving in our favor, but it was very slow until I woke up the next day, discovered that there's a 15-minute order block here where price broke structure. So first of all, would not take the Asian high, but I always prefer the sell-off where we've taken the Asian high. But of late, I've been making more and more research, and I discovered that it's not just about to take the Asian highs. Sometimes market can follow a simple market structure and continue coming down like that, thereby allowing a lot of traders to miss out on opportunities. So I've seen that, first of all, we're making structure. So first of all, this is what caused the sell. So I know we're selling all the way to the downside, but the market did not just go on a straight line because there was no much volume, no volatility at this period, the first trading week of July. So what happened was that this is the first Asian range. And I love using the Asian range a lot because it talks about exactly how or whether I'm going to find quick or good entries. So for sell, my first observation is for us to take the Asian highs and then begin to break structure lower. But over here, this is the overall Asian high, but we did not take the Asian high. Instead, what we did was we just started to melt down, move sideways, melted down. So this was the break of structure that happened on Tuesday. Around 7:30 on Tuesday. So after we broke structure 7:30 p.m. on Tuesday, the next thing that happened was I noticed that we had an order block here. So we broke structure. Remember I said before sales, I love Asian highs to be taken. We broke structure. I was patient enough, waited for Wednesday, London session, took a sell, placed a sell order here, and instantly the market almost took me out and instantly came straight to take profit. For me, here is fair enough for my take profits. I mean, for now. Remember, I still have this trade running, but this one is okay for me for my first take profits. And then I noticed that the market came back there again later on in the afternoon, and I banked another take profits. Each of them were almost about one to four, almost 1 to 4, each of them after taking the Asian highs and falling into a demand level. And after that, as you can see, we're breaking structure further to the downside. After that, price came again to tap in one more time, but I did not take this because too many tapping into a particular order block or supply area. I don't have much confidence in that kind of trade because the market can just pretend and blow past it. I've experienced that several times before. So we finally were able to tap into this demand zone, which means I've already hit my take profits of this overall trade. So this one is gone. I already hit the take profit there, and also hit my 2 take profits on the same day here in London and in the New York section. Came back the next day. Why would I have taken this? Why would I take this buy? Now this is what we are talking about. I would have taken this buy because first of all, we broke the structure from the Asian highs. So this is the break of structure. We broke this structure from the Asian. I'm just going to move it up a little so we can see the difference. We broke the structure from the Asian high. This is the first structure inside, and this is the second overall structure. We broke the structure, came back to retest. There's a demand zone that broke the structure. So we came back to retest it. And when I looked that from the bigger time frame, we are going all the way to the upside, which is, I can say for free, we're coming back to this level. If the uptrend is going to continue, then that's where I now realize that, okay, at this minute, we're looking for buys because normally I would prefer that we took out the Asian lows before we buy. But I realized that we did not necessarily take the Asian lows. Instead, what we did was we broke structure, came back to retest this level. Since we've tapped into this big order block, we're not just going to take a buy because it's very big. So if the order block, I left it here because it's only guiding us on the reason why price is reacting on this particular place like this. And finally, we've taken 3 trades in July. We took one on the 3rd. We took another one on the 5th, and we took 2 on the 5th. Now, the next day on the 6th, which is on a Thursday, we finally took a buy back into this supply area, which was a 1 to 10 risk to reward ratio. That is, by risking 1%, you are going to make 10%. That's how I trade. Excuse me. I trade by risking 1% per position. Whether I saw the position on the 1 hour, on the 15 minutes, on the 5 minutes, on the 1 minute, I risk 1% per position. Meaning that I don't calculate in terms of money because I realize that we humans were so conscious of money, and most times the emotions that are attached to money doesn't really allow us. It's almost like a boundary. It doesn't allow us to do a lot of things. And in terms of trading, like the professionals would say, your emotions almost need to be dead in order for you to succeed in trading. So in terms of percentage, this is a 1 to 10.3. Imagine on a $1,000 account, on a $1,000 account, this is a 10% of 1,000 is 100. So that is over 100, and that's on, on a $1,000 account. Why on a big account, I'm talking about on a prop account, like say for example $5,000 prop firm accounts, because I trade on Consummate. I use Consummate prop firm. They are very good, reliable. That's $500 and something dollars. Imagine making over $500 from just this particular trade on buys, and the company takes 20% of that and pay you your profit share, your profit splits. So likewise, remember, if this is a $10,000 account, 10% of $10,000 is $1,000. You're going to make over $1,000 from this particular trade alone. And after that, I now discovered that now we are going higher. So how I trade is, we build the confluence from the bigger time frame, from the daily to the 4 hour to the 1 hour to the 15 minutes, and finally start looking for better entries around the 15 or 5 minutes. So finally we came here, and after this immediately close trade. I don't want to know whatever happens here because I've just made over 10% of my accounts. So not to be greedy, forget about whether the market decided to come back and tap here one more time. After that, do we take the trade from here? No, we don't, because we don't know what exactly the market is trying to do, or I've not seen any structure yet. The next day we fell into a clear level of supply where we broke the structure, fell into a clear level of supply. A clear level of demand, We fell into a level of demand where, after choppy movement from the market, we took out the Asian lows, which I said I liked before taking my buys. We took out the Asian lows and went straight for a 1 to 5 risk to reward ratio, which definitely moved further. But somebody might have asked me, how do you know that the market will come up to 1 to 5? First of all, after taking out this, finally we took out this supply zone. After taking the supply zone, the next supply zone was here. That was why I decided to close trade on this place for a 1 to 5, which was over 5%. So imagine making 10% of my account on the 6th, on the Thursday, and coming here the next day on Friday to make another 5%. That's 15% in 2 days. After that, the market gave further options on the 5 minutes time frame, took out Asian lows, broke structure, gave all the demand area, but I was stopped out here, so I lost 1%, making me 15% up for this last 2 trades, and then 1% down. That's a total of 14%, and ended up making another 3.6% here. So that's just the explanation of how we were able to take buys all the way. So it all started from here, from the supply zone that we traded off from, which is here, this supply zone. And after that, we took 3 sales, and finally, as soon as we tapped in here, we started taking the first buy, the second buy, and finally we made 1 loss before the buy. So I can say in the last 6 trades, it was 1 loss and 5 take profits. That's just how it goes, and that's what I want to explain. Thank you for watching.